Alright guys, welcome back to another trade plan. Today's the 25th of September. Yesterday we had a pretty much kind of balanced day, like a range kind of bound day on the S&P. On the NQ, on the Nasdaq, it was a little bit more extended to the upside, but it was still kind of a little bit sideways. Now on the Dow, we got kind of the same idea. Okay, like a little bit towards the upside, but it was real pretty much kind of like in a range. Okay. Now, as I mentioned on the trade plan for Thursday, I said if we opened below and we had no volume to the downside, okay, which we came down, there was no sellers left to continue pushing this lower, we were gonna see a move to the upside. Okay. Every time that you see um, at the open a move lower or higher with low volume, that is likely to not hold and you're likely to go the other way. Okay, so for example, if we take a look at the ES, you see how we open right here, we kind of go up, we kind of go down, okay, and then we kind of trade back above the open. Okay, anytime that you see the market kind of trading back above the open, you know that it's low confidence. Okay, especially if it goes back and forth. So look, we go up above it, and then we go back below it, then we go back above it, we go back, and then go back above. Okay, so at this point you already know, very likely this day is going to be pretty much sideways, or at least going to try to be sideways, right, which is pretty much what we get um, on the day. So just kind of keep an eye out for that. Anytime you see it trading across the open, many times low confidence. If it goes kind of, it opens and it just kind of goes down, pulls back a little bit, keeps going down, pulls back, then you know it's a little bit more high confidence. If it completely just sells off at the open and then just never goes back and you never see any kind of pullback, then you know obviously that's high confidence. But anyways, yesterday we on the S&P we pretty much filled in this imbalance. Okay, anytime you have an imbalance, you always expect it to fill, or most at least usually you will expect this to fill, right, for prices to kind of trade inside it. Okay, so we did that. We no longer need this. That's repaired. We no longer need this point of control, obviously, as we are trading a new day. Okay, today was a pretty much balanced day, so we are going to use um, value area as our reference levels. This is going to be the value area high. Value area low. Okay, and now if we are anywhere inside this zone, again, you expect prices to be accepted pretty much anywhere here, so you just kind of expect prices to rotate, so continue to be in here. Okay, now if there is high volume, you would look for a breakout. Okay, but if there is no high volume, okay, you kind of expect prices to remain in value, right where they belong. So that would be around here. Okay, but if the volume is high, that means somebody's trying to push it out of value, meaning prices are likely to break out. So you can go with any breakout that you see out of here. Okay, now our line in the sand level, is going to be up here on the value area high. So above this, we are going to be bullish. Okay, below it we are bearish, expecting rotation. Also, another thing that you want to keep in mind is look at this excess right here that we have. Okay, do you see this tail? Okay, this is a good low. Okay, if this market were to rally from here, okay, that would be a good rally. Okay, it would be a supported rally because we have excess. That means people that got in here are strong and they support this move higher. Okay, so this is a good sign if the market is going to rally. Good sign that a rally would hold. Okay. Now an excess is just like an imbalance. So just kind of treat it the same way. Okay, if you see it trading inside it, expect a little bit of a rotation, fill it in. Doesn't have to be like anything crazy, just expect it to fill it in a little bit and then continue or reject. But that's pretty much it for the S&P. Now take a look at the Nasdaq. Okay, as you can see, same idea. Imbalances fill. Again, we got rejected at the open. We opened right here, came lower, no volume at all selling. Obviously we get rejected and we go back towards value. Okay, the gray area is value. Okay, whenever prices are rejected like this, they will race back towards value. Okay, so just keep that in mind. Now, again, as I mentioned just 2 seconds ago, this imbalance gets filled, guys, and it's just kind of always keep that in mind. Imbalances like to be filled. Okay, so whenever you see prices kind of trading in there, expect some sort of rotation within it. Okay, expect rotation within it. Okay, look at this. You guys see how prices just kind of rotate inside, like inside it, inside it, inside it. Okay, that happens over and over and over. Okay, so just always keep that in mind. Okay, we no longer need it. We are going to mark out value area as our references. Again, value area high is going to be our line in the sand. Above it, we are bullish. Okay, and also keep in mind there's an excess here, meaning the buyers are strong. Okay, so if this is going to hold, that would be a very supported move. And that's pretty much it for the NQ. That's pretty much it for the NQ as of 8:26 a.m. We're trading at around the middle, so we know that this is likely to just hang around here today. So just keep an eye out for value. I don't know if you guys get a chance. Let me know if you guys just want me to just pause a little bit on each each day, kind of like this, so you can take a picture of all the levels or something. Um, if you don't get a chance to just write them down or whatever, I'm gonna start doing that. Maybe that's easier if you guys just if you want to just take a picture of it. I'll just take a few seconds and showing you the levels. Now last but not least, the YM. Okay, also we have an excess. Okay, we barely didn't fill the gap. So again, what does this tell us? The buyers were aggressive. Okay, sellers were kind of giving up. Okay, we completely repaired the poor low as expected. Okay, and now we are going to use, actually wait, we fill this imbalance too, right? So here you can see, just like in the other ones, fill the imbalance. So we no longer need it. No longer need this point of control. And we are going to use value as our references. Okay, very simple. Above, we are bullish. All right. That's going to be pretty much it. Um, Again, if we are inside this area and we have low volume, just expect rotation up and down, up and down, up and down. If we do get some high volume, then a breakout is likely to be supported. So just keep an eye out for that. You know, if you see it kind of trading above it and then just kind of going up, failing, 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 and then it starts kind of getting back inside it, you know, very likely it's going to go back and trade toward the downside of this value. And then obviously once it gets here, you should expect to see some sort of reversal or some sort of like support here and then back up. Okay, but if there is no support here and you just kind of see it cutting through and there's high volume, it's more than likely to just break out and go lower. Okay, so just keep that in mind. Balance days are pretty predictable. Okay, so just keep an eye out for balance and you'll be okay. Okay, also another thing is don't trade in the middle. Okay, don't be trading long or short anywhere inside the middle here. Okay, that's how you're asking to get chopped up. Okay, so don't be trading too much inside this area. Okay, but that's it. Thanks for watching, guys, and I hope you guys have a great day today.